So far, the economy is doing better than expected, and the markets seem to expect a soft landing. What are we to make of this current market amid potential regime shifts in the economy? Hi, I'm Jeffrey Roach, Chief Economist at LPL Financial, and welcome to the latest edition of the LPL Street View. In this video, I'll address key takeaways for investors as they prep for the rest of this year. The first item to discuss is the dynamics within consumer spending. As shown in the accompanying chart, the pandemic accelerated the shift toward e-commerce, and promotions such as Amazon Prime Days likely added to that boost. And in July, online shopping rose 1.4% month over month for the second consecutive month, the fastest monthly pace of sales since December. Annual growth rates for non-store retailers showed consumers' healthy appetite for online shopping compared to general merchandise stores. This is an economy where businesses need to carefully manage inventory and headcount as consumers gravitate toward the non-brick-and-mortar shopping experience. Investors will likely reward those retailers most gifted to serve this post-pandemic consumer. The second item here is the use of credit card debt to fund spending. The growth of credit card debt accelerated into the recession of 2001 and 2008, so the increasing rate of card debt now could be a harbinger of things to come. As shown in this second chart, when an economy is slowing and going into recession, consumer spending slows and card balances often grow to offset factors such as slowing real wage growth. The increase in card balances foreshadows a weakening consumer, and as the consumer goes, so goes the economy. I think investors should pay close attention to unpaid credit card balances for signs of any cracking within the consumer sector. Stubborn inflation is one reason credit card debt has spiked recently. And amid rising balances, credit card rates reached an all-time high since the data series began in 1972, pushing additional pressures on consumers. The third item to highlight is the shifts and emerging trends in inflation that will likely continue throughout the rest of this year. I show here in my inflation dashboard with the latest figures for import prices and producer prices. And although inflation is trending in the right direction, it doesn't mean another rate hike this year is out of the question, especially with rising prices for gas. However, we think the Fed will pause during its September meeting, but will keep everything on the table for the November meeting. Investors should find plenty of opportunities in this market, despite the disproportionate easing in inflation pressures. So that's all for now, and continue to follow the LPL research team on social media, and take care.